Okay, we've been talking financial statements all day. Things that affect financial statements. GAAP-based financial statements. And so now we kind of, for the next hour and 15 minutes or so, we're going to kind of turn the table a little bit and talk about what our responsibility is, right? Because when we talk about these financial statements aren't ours. We like to take ownership because we get them in the format that they should be in, right? We make sure there's debits where there should be debits and credits where there should be credits and all that type of stuff, and we talk to them about presentation and disclosure, but that's all theirs. Our part of it is we own the report. Be it the audit report, that's ours. The review report, that's ours. Compilation report, that's ours. Okay? The legend on the prepared financial statements, that's our stuff. And so what are our responsibilities when it comes to performing these type of engagements? So we'll talk a little bit about, the current environment and implications for audit planning. Because I understand you all do audit work, right? And now, is it year-round or is it mostly calendar year, folks? Both? Yeah, it's a good mix of both. But what, at least if you're like us, what you'll be talking about here for too much longer is talking about your year-end planning. And some of the things we're going to have to consider going into this next audit period, because it's not long now, right? We're already into November. I've already had some discussions. In fact, I've been returning some emails with some of my crew there in the Huntsville office. We've already got an audit planning meeting talking about the upcoming audit season scheduled for probably early in December to talk about different things like that. What are y'all paperless? No. Yes. Yeah. The boss man says no. The people who do the work say yeah. So we've been paperless. In fact, I've been paperless in my audit practice probably for a minimum of 15 years. When I started doing that, I started doing it paperless. It just was easier for me because I was the one doing most of the work. We do it that way. When I moved to my firm that I'm at now, when I was transitioning in, onboarding, whatever they call it, I said, hey man, if you got any paper files, we really don't have any paper files. Everything here is digitized. And so we use something called Advanced Flow. Have y'all heard of Advanced Flow? It's Thomson Reuters product. We went from their engagement or their work engagement solutions or whatever like that to this. One of the other, the firm I'm at has merged into 2 or 3 firms, so some use Caseware, some use Engagement, some use Creative Solutions. Now we all use Advanced Flow, which is online based, so it's a cloud based. And so we use it for all of our information, so we're talking about training for that and getting everything ready. Well, one of the things we really got to consider going into this period is talking about the current environment. Now, what does the current environment and economy, right, what's going on right now, and we still don't know who the next president will be. That's still up in the air. I was discussing with this gentleman down here. It probably will be up in the air for a little while. There are 3 or 4 key states that could tip it one way or the other with the electoral vote. Whatever, it's just going to be a while. But typically that changes things as we know it in the economy. It may change for the better for some of our clients, it may change for the worse for some of our clients. We really don't know. But that's one of the things we really got to consider going forward with our clients, right? Why is knowing what's going on in the economy so important to these engagements that we'll perform? Expectations, somewhat. Who said expectations? It came from that math man, right? See, like y'all like, wasn't me. You didn't see my mouth move, did you? Yeah, sure did. But I saw the going out like that. Yeah, I'm learning to read. I'm a mask reader now. People got lip readers. I'm trying to be a mask reader. I'm not doing too good. But maybe expectations, right? The underlying principle of general accepted auditing standards says what? We gain an understanding of their internal controls to be able to assess the risk of material misstatement due to error or fraud. Well, understanding those and understanding the client and its environment has all to do with how we plan these things going forward. If we're performing a review engagements, one of the things we got to do is develop expectations, right? We develop expectations so that we can plan our procedures toward those areas of risk. Even in a compilation or a preparation engagement, an understanding of what's going on in the economy is pertinent, because what is our responsibility there? We've got to read those financial statements. How do you know what those financial statements are supposed to look like unless you kind of know what's going on here, what's going on with our client, and so forth? So we'll talk a little bit about the current environment. Now understand this. This is going to have some, talks about these key economic trends that currently affect the U.S. small businesses. Well, those trends change like crazy. Those trends in January looked a lot different in April, right? And they've even shot up different from there. So we'll talk a little bit about that. We'll look at some of the key risk areas identified by executives for 2020 that we're almost through with, but that we'll be performing some test work on, right? And then, of course, our key responsibilities related to risk assessment, okay? We'll also look at common deficiencies in audits noted by the peer review board. Blah, blah, blah. There's your underlying principle, there's your performance principle underlying gas. We identify and assess the risk of material misstatement, whether due to fraud or error, based on our understanding of what? The entity and its environment, including its internal control. How many auditors in here? Oh man, the dude's over there like, oh, sorry man, that's me. Yeah, be proud, that gum, you're an auditor. Do you remember how many elements there are to your client's internal control system? Like, why is he asking questions? So you don't have to take a test that I will forget to give you. Anybody remember that? See, now, when I took Newt Becker's CPA review course, like thousands of years ago, he had a lot of mnemonics. Anybody else take Becker CPA review? Nobody else took it? I took it, and he's big on mnemonics, right? His mnemonic or acronym for internal controls was CRIME, C-R-I-M-E. So you got 5 elements to the internal control system, right? Those are all affected basically by what goes on in the environment, stuff like that. But it's key. We've got to understand those in every audit that we perform. Why? Why do we have to understand it? Well, to assess the risk of material misstatement. What are some of the factors that we think about? What's going on in the industry, the regulatory agencies, and so forth like that. For us, some of the things that we consider are not only what's going on in the economy and business and industry, what's going on, because we have some clients in South Alabama who have just been hit by natural disasters after natural disaster after natural disaster. And so those are some things that we consider also. What's the nature of the entity? What are some of the objectives? How do they measure and review performance? The internal control, which includes the selection of accounting principles. That's an interesting concept, right? Do you have clients who come to you, let's just say they're a startup, says, by the way, I need some audit work from Ripley Doorn. I need you all to do an audit for me. I'm a new startup. And so we understand we got to have financial statements because we got financing and the client, the lender calls for this. And so, your first question may be, okay, we can probably do that type of stuff. We've got some client acceptance things we got to go through to make sure that you're somebody with integrity and we can perform this engagement in the manner that we're supposed to. What financial reporting framework do you use? And what do they say? Wait, I'm sorry, you said what? Accounting framework? And what's that supposed to be? Right? And they don't always have an understanding, right? But they're responsible for it. Do you have a pretty good understanding of what your client thinks you can do versus what you really can do for them? Because my clients think I can do a lot more than what I really can do for them and maintain my independence. Right? And so when we start thinking about these type things, we understand it's their responsibility. We may have to educate them. And when it comes to, internal controls and understanding the environment of our client, we understand not one size fits all. It varies across industry. It varies demographically, asset size, complexity. SALLY. Y'all ever use that acronym whenever you perform your work? SALLY? Same as last year? Sally don't work in my office. I've used that. I've seen some of my staff use it. I don't necessarily like it because, just like that said, things change from one year to the next. They do. Now, maybe they have not made changes to some of their processes, and I can go along with some of that. But if we're talking about changes from 18 to 19, I would hope to see there have been some changes in their processes if they're gap-based. And if there hadn't been, then we're working with them in these narratives to make sure their processes do change, okay? So just because you see Sally's not always applicable. PBC, y'all use that one too? What was that sample? Please be careful. Please be careful. That's the way I learned it, okay? When I got out of school, I went to work for a former Anderson partner. Now, you young folks in here may not understand that it used to be a V8 firm called Anderson, okay? And so I had the opportunity to go to work for Anderson out of their Atlanta office, but I wanted to stay local, so I went to work for a local former Anderson partner. And that was one of the things he drilled in my head. Brian, PBC don't mean prepared by client. It means please be careful because I see you put a work paper in there that said PBC and you didn't do anything to it. And he was right. I said, well, I looked at it. He said, yeah, but son, I hope they can agree to their own work. And that's kind of what a PBC schedule shows, right? We've agreed to our own work. At a minimum, flip those type things. Please be careful because things change from year to year, right? So think about some things that matter in light of COVID-19 when it comes to industry conditions, right? And some markets have seen a bit of change. They just par for the course. They do what they do. They're still doing their processes. They haven't had any kind of restrictions whatsoever. They've been able to maintain and move forward with very little disruption. Others have been significantly impacted. Some for the good, some others not for the good. But we've got to have an understanding of that going into the year when we're developing expectations. You know, I got a paint contractor, and the painting contractor would contact me. Miss Betty contacts me numerous times throughout the year. She says, you know, they were talking about PPP loans, they're talking about all these other type things, and so she was like, Mike, we can't keep our people hired because they'll make more on unemployment than they will work for us. What do? Do we make up that difference and pay it? You know, so those type things are affecting. I don't know if those are affecting some of your clients, but they've affected some of our clients. And they've had to make some of these decisions. And what happens if they get that PPP loan now and they're losing employees and maybe their unforgivable portion grow? You know, these are considerations we got to think about going in. You know, do they have cyclical or seasonal activity? I told you that the places along the Redneck Riviera where I go on vacation, it's beautiful down there, really. You know, I may joke about it, but we've got beautiful white sandy beaches, and most of the time the water's pretty clear and stuff. But boy, people down there rely on tourism dollars. And when tourism gets restricted like it has been, man, it is rough on them. I know some people who, I've got somebody I know who has like 3 restaurants in Orange Beach. And, you know, they've been up and down, you know, up and down. They've had to close some. He's had cooks or employees who have been, you know, subject to being around something. So then they have to close the restaurant. They have to quarantine for a number of days, right? And those are things we got to consider going into this season because they could impact these financial statements. Even when we think about product technology, supply and availability of cost, just think about supply availability, right? Do you have any of your clients who have been affected because they can't get stuff from their suppliers? We've got a friend of ours who lives down the street from us. Had a storm come through, a tree fell down on their garage, tarped it up, covered it up, that type of stuff. Had the insurance adjuster come look at it, had everything set to go. Well, they couldn't get the engineered lumber that they usually get because the manufacturer had to shut down for a while. And then it took them a long time to get the product because the people who got the product for them to finally get to them, well, they were way behind, they couldn't get out. So these things are going to impact our clients, right? The general level of economic activity post-COVID-19, are we post-COVID-19 yet? I was reading something at the break, and evidently Meemaw has extended the mask mandate in the state of Alabama through December also. So those things will continue. They'll probably continue through flu season. I don't know how long flu season lasts, but I foresee us going through these same type of issues. Now, just wearing a mask doesn't necessarily affect it, but when you're talking about letting people into your storefront, into your restaurant, into your retail business, and you're only at 50% capacity, that's going to affect you. Or when you're, delivery only or drive up only, we'll meet you outside. I think about, some of our, everybody, we're football crazy in the South where I live. We just think we can't live without it. But then we think about some of our stadiums now that may be at 20% capacity. Think about all the outlying things that go on too. Some of these college towns, some of these college budgets, when we're talking about budget shortfall because football rakes in the money. We proposed on free engagements for Auburn University this year. The Auburn University Foundation and a couple of their other, that we had to agree upon procedures to make sure they were in compliance with what the NCAA requires, and then they also had another audit that we proposed on. And the dollars generated by football that fund all the other sports. Y'all do any higher education? Universities, colleges, that type thing? Those places are being affected. We've had some that have shut down all their sporting activities, extracurricular activities. And then when you're having students who are virtual instead of on campus, what does that do to all the on-campus activities? I mean, y'all got universities around here that I'm sure are feeling the pinch of what's going on, and it's everybody. Interest rates are still low and still good, right? The availability of financing, I think it's as available now as it's been in a long time. Inflation, currency revaluation, the regulatory environment, accounting principles have been pushed back, so we've got effective dates that have been pushed. Regulatory industry, all these type of industries are affected. And so other things we consider, we're not going to take too much time to go through all this, but these are just factors we need to consider when we're performing these audits about what goes on with the business operation, revenue resources, and those type things to be able to plan. Understanding how to assess risk. Now, I will cover these three areas of risk, right? There's the client's business risk, and that's risk associated with their opportunity to survive, to be profitable, to have integrity, and so forth. When we're in an environment kind of like we're in now, right? For those clients that have really been affected, what should be on your thought process going into audit then? What opportunity might exist at a higher threat level now than it would if we weren't going through what we're going through? Fraud. You thought about that? Y'all remember your fraud triangle? Anybody want to tell me what those corners are? They're like, yeah, we remember that good. All right, just keep on. Threats, realizations, opportunities, all those type of things. And we think about the environment where we're at right now, and you have a client whose business has been severely impacted, and they're just trying to stay open, but yet they know they have to have financials to the bank that meet certain things, and they can't, and so forth. I'm telling you, I think we better have a higher risk awareness going into this next engagement season due to COVID-19. There's audit risk. That's the risk that we may unknowingly fail to issue, to modify a report when we have materially misstated financial statements. So we've got our own risk. There's also the auditor's business risk. risk of potential litigation from claims because of audit failure. I mean, if you read something, if like you're on LinkedIn and there's one guy following on LinkedIn, bless you, he talks about, well, I'm glad you took your mask off. That'd be nasty, man. Wouldn't it? That would just be disgusting. Anybody sneezed in your face mask yet? Yeah, you pull it off, look like cobwebs. It's awful. I haven't done it, but I've heard. Okay? Sneak up on it. Somebody at the break said, hey man, you want to see my car? There's some good people here, man. I like them. Fee realization, the effect on the auditor's reputation, resulting from the association with the client. Now, when we think about that, we think about our business risk, then we start thinking about things such as what? Marijuana. Is marijuana legal here? Well, somebody's really disappointed on back there like, crap, no. I got busted just last week. But that's a big industry, right? And people may come to your firm at some point in time and say, hey man, we're just trying to find somebody who'll do it. We got to think about what the regulatory environment is. That could be a business risk to us, right? Current economic factors. We'll just hit this real quick. Stock markets were strong, but then fell 37% in March. They've rebounded pretty well, I think. Consumer confidence was strong, but then you see some things change in 2020 due to coronavirus. Unemployment was historically low before the pandemic and spiked in 2020. Now it's come back somewhat. Of course, that's important to consider when we're thinking about the assessment of the risk of material misstatements. There's some of your stock indices, and again, now these are a little bit dated. This is as of early April 2020 when we're looking at the stock market. See, it was just going, then it went down, and again, it's come back. Unemployed persons, market conditions, we have continued low interest rates. Man, I never would have thought we'd seen interest rates this low for this long, right? You think about, man, I remember a few years ago, I refinanced a home mortgage loan like 4%. I'm like, that's sweet. It'll never go lower. It's about half that now, And so we think about those type things. But that affects our clients and their businesses, the rates. Let's get to executive perspectives. Some of the top risks for 2020 before the pandemic. Okay? And so, the concerns about economic conditions are some of the things that really these top executives looked at. Some of the biggest concerns are operational. These legacy IT systems. I don't know about you all, but whenever we were required to go remote, right? I don't know if Idaho kind of went into the whole lockdown process, but early in the process, it could be a city like our Birmingham office. We've got two offices in Birmingham. So our downtown office and then our River Chase office, both had to all go remote. Okay? Luckily for us, we had the technology to be able to do it at that time. There are others that did not have the opportunity to be able to do that, right? And so IT and legacy IT systems that have been in place for years now may not be competitive to be able to help us with the remote situations, right? If we didn't have iPads at that place out in California, we would have had a hard time doing an inventory observation. What would you do? What would your concern be if you're not able to go out and physically observe inventory? And you couldn't do it remotely either. Firm I was talking to in Idaho Falls, they said, hey, we've got one that's a healthcare organization. They won't allow us to come out and observe inventory. And they don't want any cameras in their place either, recording when they do it. I mean, what do you do? What would you do in that process? For me, I'd have to think, hey, is this somebody that we've done work for a long time? What's their history? What's the likelihood of material misstatement within that account? Can we go through the opening balance and just do roll forwards instead of roll backs that we may do sometimes. But that's where we're going to have to be in determining what is our responsibility in the remote environment with some of these IT systems. Okay? The impact of regulatory change, regulatory scrutiny continues to be a top concern for 2020. So here are the top 5 risk concerns. Regulatory changes and heightened regulatory scrutiny may noticeably affect the manner in which our products or services will be produced or delivered. This is what executives think, right? We can't get supplies, so how can we get it out? And we can't deliver inside their facilities when we always have been able to. Now we're going to have to leave it outside. Then we have some risk of it sitting there. And what if we don't have people to be able to deliver to those areas? What if we can, And so these are all just concerns that these executives had. Economic conditions in the markets we currently serve may significantly restrict growth opportunities for our organization, which means, hey, we work in an area that's very depressed, that's been hit hard by COVID. And so how can we really grow there? Well, we can. Now, who knows? Maybe next week this whole thing goes poof. Yeah. Monkeys might fly out of my butt. And what was that in? Like that was in a movie, wasn't it? I don't think it's going to happen like that, right? Our organization's succession challenges. This is us right here. The ability to attract and retain top talent in a tightening labor market. I was talking to somebody about, hey, in fact, I was talking to Josh, we are heavily looking for people right now. Tax people. What's that? How much do you want? Yeah. Do you say War Eagle or that other thing? That's going to depend if you don't work with me, bro. But that's it. We're having a hard time finding that 5 to 10 year experience person. The unicorn is what we call it. We need the unicorn. Because in our Huntsville office right now, listen, we've got some great staff. Actually, the pandemic has helped us out because we've picked up 2 Big 4 people who, one of the kids, I call them my kids, and they're old enough to be, yeah. I know. But we picked up one of the kids, he worked for PwC out of Houston. He was from Huntsville. So the pandemic, they shipped him home. Said you work remotely. And so he came home to Huntsville. And so he thought, this isn't that bad a place. He had gotten all over the, got away, I've flown the coop. And so he's working for us now. He is a great addition to our audit staff. We've got another audit staff coming in from Atlanta that was with EY out of Atlanta. She happened to marry somebody from our area. And so we've got that, but they're young. These are staff A and staff B. These are 2, maybe 3 year experienced people. The whole 5 to 10 year. Then we've got a manager, and she's been with us, 8, 9, 10 years. So she's got, and then you got partners. And so we've got a great early staff, and they're learning, man. I'm gonna tell you, the kids coming out these days are smart, man. You young people, y'all are smart. Smart as crap, a lot smarter than well, maybe smart as crap's not a good term to use. But you understand what I mean. I've never met a smart piece of poo, but anyway, you're smart. So, but that's the problem not only with our industry, but all industries. You hire somebody. We had somebody leave us to go to government contracting because they were going to pay them big bucks, and we pay good. Now, listen, when I came from where I'm at now, and I look through some of our salary ranges, we pay good. I'm not here recruiting. I'm not. He's looking like, you stop that right now. You touch your mouth. but that's it. We did, but we had somebody that a GovCon offered him 25% more. Man, it's a tough market out there. The labor market may limit our ability to achieve operational targets. And not only just talking about us as CPA firms, but our clients too. Existing operations, legacy IT infrastructure, insufficient embrace of digital thinking and capabilities. You know, in our own firm, this was a great year to do it, I'm sure. We changed a lot of our technology. You know, we went from 2 or 3 different audit packages to one. We changed tax programs. We changed our own firm management program, firm practice management program. So we made a lot of changes, but we felt that's what we needed to do to keep up with. Now again, it's like drinking water through a fire hose. There's a lot of things going on. You just kind of feel overwhelmed sometimes. But for us to be able to maintain and hopefully grow, we felt like we had to. Well, think about your clients who have some of this old IT, and now they're dealing with their competitors having IT systems that are here that can handle remote work, that can handle doing these type things because their IT enables them to. What does that do to your clients who are still, you know, pen and paper? Who may, I mean, boy, you think about it even in the agricultural world. I mean, I remember years and years ago, you know, we had relatives who were farmers and so forth. I can remember getting up in those tractors, and if they had a covered cab, I mean, that's like a Cadillac. The Cadillac's not even, that was like a Tesla. So, you can't hide money, right? And he was the one that asked me, what you pay? You didn't say another Tesla? I ain't taking him. No, I'm just kidding. But you know, you had a cab. But you get into the technology, you hop into one of those cabs today. It's got GPS. It's got air conditioning. It's got all the, and if it doesn't have it, those people are behind. They can't be as efficient as, you know, the people who have the GPS technology and who map all these things out and who give you the best way and who are telling you know, my lumber mill client, you can go into their computer control room. What they've done is they've purchased these shipping containers, right? And they've taken a couple of these shipping containers and had them out there and put them, and they've insulated them, and they're just computer rooms now, full of all the computerized technology that will x-ray this log, and that has all the inputs of what, you know, the price per board foot and all this type of stuff is to go, and saying, hey, it would be best to get this length of product from this type thing the most effective way, and it's doing it in a matter of seconds. You know, it's not like you've got somebody on that side and on this side, and we've got no saw doing like that. You know, it's not that way anymore, and that's some of the concerns. Man, we got technology issues that if we're not keeping up, we got problems. I wasn't born digital. I was born heavy. I was 10'3" when I was born. My mom's still kind of mad at me. 10 pounds, 3 ounces. I saw, you know, the other day in our hospital, there was a 14-pound baby born. There's women in here crying right now. They just can't imagine. 14-pound baby. Now, I don't know if that was natural or what, but that was a pounder, man. That kid was a quarter pound of cheese. He was big. What's that? Dude, let me tell you, that's your offensive line. I guarantee you, somebody like Lane Kiffin is there. Your baby's beautiful. Can I kiss him? So we weren't, you know, if you weren't born digital, you may be behind the curve. And that's what executives are concerned about going into the next year, not only the next decade. We were discussing earlier, you know, we're making changes right now that we would have thought we would make 5 years down the line. You know, when it comes to technology in those areas. I mean, that's a big, big deal for a lot of people. Resistance to change may restrict our organization from making necessary adjustments to the business model and core operations. That number 5 is the reason why I changed firms last year. Where I was at, there was resistance to change. I'm doing okay. We'll be fine. You know, let's just keep it right here where we are. And so that affects us, that affects our clients. So going forward, these are concerns going forward. So as we think about getting into the next audit phase or whatever like that, these can affect how these financial statements might look and where some of our risks are, right? There's some of your top risks: economic conditions, succession planning, regulatory changes. I always thought this was kind of funny. I think they have a typo. Your risk assessment responsibilities, common efficiencies, insufficient risk assessment procedures. Well, I guess maybe that's the case. We just don't do it, so I guess you're more efficient when you don't do it. That should probably be deficiencies instead of efficiencies, although I kind of understand. An inadequate understanding of internal control, failure to link procedures performed to risks, failure to identify significant risks. Listen, in every audit, there should be significant risks. In every audit. You know, going into the 2019 season, for us, significant risk was usually revenue, but it was especially revenue. Because, you know, we thought we had had good discussions. We thought we know how it's supposed to fall out and so forth like that. That's significant risk going in. But some folks hadn't identified significant risks. We won't talk about what audit standards require because it's talking about understanding of internal control. Do y'all like the test controls? I mean, do y'all really rely on tests? We don't either. It's more efficient for us to do a substantive audit, but it doesn't get us out of the responsibility of understanding their internal controls. Some people get confused and say, hey, you did a walkthrough, we tested control. You didn't test controls necessarily in a walkthrough. You walked through a transaction maybe, but I don't know that you necessarily tested control. Maybe you did, but some of the documentation that you see in peer review doesn't lead to that's a test control, okay? See, they got this right. Common audit deficiencies, failure to document planning procedures, and the linkage of risks to response. Understand, it's a risk-based audit. If I see high risk, I would plan to see numerous audit procedures performed. If it's low risk, maybe I'm just seeing inquiry. If it's moderate risk, I'd see a mix of both, right? What I wouldn't expect to see is high risk, relatively no procedures, little to no procedures. Or low risk, and boy, we're testing everything. I've seen that. And I've asked, I said, man, why in the world are you doing all that? Well, the client kind of expects it. I'm like, dude, you're bookkeeping. And ain't nothing wrong with bookkeeping. But when you're auditing, you shouldn't be bookkeeping. It should be risk-based. Okay? There's been a couple of peer review clients of mine that I've gone out to, and they're still doing lapsing schedules for prepaid insurance. I'm like, where's the risk? The risk for what? I said, risk for material misstatement within prepaid insurance. They're like, that's really not risky. Why are you doing a schedule? Well, they just kind of like us to do that so we can, you know, adjust prepaid. You know, you're becoming their internal control when you do those type things. In a way, you're performing non-test work for them. Basically, at an audit, it's risk-based. Your procedures should be supporting your risk analysis. If I were to lay a set of financial statements in front of you and say, you show me the risk, that's kind of how I go through my audit planning meeting, especially with new staff. I'll give them a copy of the financial statement. What do you think would be risk? Where's your risk at? I can just about guarantee you I wouldn't have AM say, well, prepaid insurance, whoo, sketchy. Now watch out for that prepaid insurance. You know, it's just but I see that in practice. Sampling methodology, there's a lack of documentation around that. Include audit documentation that contains sufficient, appropriate evidence to support the opinion. Gotta have it. Blah, blah, blah. Let's move on through this. When it talks about these non-GAAP measures, you know, be careful when you are performing procedures and maybe your client uses non-GAAP measures. You know, EBITDA, that's a non-GAAP measure, right? Some of your ratio in that is non-GAAP. But sometimes they use these not to understand. That's not our responsibility. That's outside the scope of the audit. Okay? But sometimes they include that information in information that includes our auditor's report, financial statements. If it's included in there, then we've got a responsibility to read, make sure there are no material inconsistencies, and then get some representation and move forward. Okay? Because our opinion doesn't cover that. We still need to read and consider whether they're materially inconsistent. There we go. Adjusted EBITDA, earnings per share, you know, net debt, all those types of things. We've talked about Rev Rec. Ooh, professional skepticism. That's a good one. That's getting a lot of play recently. What is professional skepticism? Anybody know what that is? What professional skepticism is? Just about every, SARS 24 or 25 talks about professional skepticism. The audit standards emphasize professional skepticism. So what is it?
Having questionable minds and not taking things at face value necessarily.
Absolutely. It's, we want to believe it, but I don't. And it's having that, you always think back to the old President Reagan, when he quoted the Russian proverb to the Soviets when he was discussing with them the Cold War, and they're trying to get out of the Cold War. He used an old Russian proverb because the first time they had sat down for talks about the Cold War, for those of you who weren't around in Reagan's term, he was the great communicator. Okay, he was of course, a former movie star who turned president. But he was having discussions with the Soviet Union during the Cold War, and the first time the talks just broke down. So he came back to the U.S. He found himself a Russian translator, and he talked to me. He said, "I want to learn some Russian. I want to find a way to communicate with them that says, hey, we're really on the same side, right?" And so she taught him a Russian proverb. I'm not going to quote it because I can't speak Russian. Obviously, if you've heard me talk any today, I barely speak English correctly most of the time. But he got up at the second shot at at ending the Cold War, and he turned around to him and he said in Russian, "Trust but verify." And that's professional skepticism. Trust but verify. When we have a professional standard that tells us what? You work with people who have integrity. So that tells me I should have some trust built up with my client, but yet you're telling me to be a skeptic. Trust but verify. Go in with that skeptic mind, okay, an attitude that has this questioning mind. Be careful of going in with bias. Think about your fraud risk inquiry. Do you ever go in with a bias when it's a fraud risk inquiry? I know they're going to tell me there's nothing going on, and they haven't stolen, and they don't know of any way they can do it. I think I do. I mean, that's kind of human nature when we've dealt with it for years and years and years. So maybe I need to have a different way of delivering those questions and those inquiries if I want to make sure that nothing's going on, right? We've got to maintain it throughout the entire process, need to be aware of unconscious human biases, other incentives, that pressure that affect our skepticism. So, that's that. Now the new auditing standards, we just want to buzz through these real quickly because we know they're there because they got an effective date that's been pushed out a year. And then we'll get to the Sars. We'll probably finish with the Sars. Okay? Does that work good for everybody? Actually got a pulse? Everybody doing good? There's just been a few people get up and kind of walk around. You can kind of get up and walk around if you want to. I don't mind. At the break, I always try to sit down because I've been up here walking around all day. Okay, new SASs. Starts with 134, goes through 140, SAS 141, then extended the effective date of all those SASs. Okay? And so now instead of having to put these in place as of calendar year 2020, we have until calendar year 2021 to put these in place. Now when it comes to the auditor's report, I'm okay with that because it's going to look significantly different. Okay, and we'll get into that. There we go, those are all your changes. This is why they're doing it. So auditors reporting, they work with the International Accounting and Assurance Standards Board and the PCAOB, and they kind of use their report. They change the geographic location of where your opinion is. Currently, where is our opinion located in our audit report? Down toward the end, right? Down toward the bottom. And so now the new format of the auditor's report, which hopefully you won't have to memorize for the CPA exam, will be located at the top. Okay? Your auditor's opinion will be mandated that it's the opinion section is presented first, followed by a basis of opinion. It talks about these key audit matters. I am not a fan of the key audit matters. The key audit matters will not be required to be communicated, but your client might engage you to put those communicate those in your auditor's report. And those key audit matters are things that typically keep us up at night as an auditor. Areas of complexity, areas where we've had to use judgment, areas where there have been material misstatements in the past that we've had, those type things. How comfortable do you feel about putting that in your auditor's report? That's a general use auditor's report, so you can tell the world, hey man, it's in there, but we ain't too sure about it. That's kind of how I think about it. I mean, that's just putting it in plain redneck English, not really plain English. But that's kind of what the key audit matter concept is. The PCAOB calls theirs critical audit matters. And they've kind of done stuff that's been in place for the PCAOB for a little while. And their thought process is, well, we'll probably get a lot of boilerplate stuff, and we really don't want boilerplate stuff within our critical audit matters, which is why we're not going to make them mandatory, because we think they've done a study. They said even those who do report on critical audit matters, it's boilerplate stuff. Okay? So, will they keep those in there? Yeah, probably so. Will they ever become mandatory? I hope not. Those are things that we've already discussed with management anyway. And so it gives the allowance for key audit matters. It also will expand the description of management's responsibility. It will also include an explicit acknowledgement that we as the auditor are required to be independent and comply with ethical requirements. And so that's going to be explicit in the report. It's been implicit for years, right? Because it has a title, Independent Auditor's Report, because we're required to be independent. Let's see. It will also include statement acknowledging management's ability to assess going concern, whether there's a going concern or not. Of course, it's management's responsibility to do. We're talking about management's responsibilities anyway, right? Their responsibility for the preparation and fair presentation of financial statements in accordance with framework. We're also going to have that in there now. Guidance on when we report on those key audit matters. And so if we think about the new report, opinion is located up top. Where does it address within the body, and we won't go into the key audit matters. You think y'all will ever report on key audit matters? You ever think you'll have a client who says, I would like to have those in my report, please? Man, they don't know. They're not going to know what a key audit matter is anyway, unless we tell them. So, that's kind of up to us. Again, those things, I'm going to be honest. For me, that puts us at a greater risk of litigation. If I were to put that in the report, I'm just basically saying, come at me, bro. Come get you some of this. And I'm not, it's not that I don't trust the work we do, but and I probably told you the story about the inventory at the lumber mill where the scale house wasn't working, and so we had to get some dude who looked like he came out of the movie Deliverance to figure out what the tonnage was, and he did it by hand. And that, I was just staff at the time, but that would have been one of those areas that just, if we would have been required to report key audit, that would have been in there, and that would just, to me, that just sets us up for litigation. That's just me. We're not going to include it. Just get away those things scared. Okay. It also changes some of the wording modifications a little bit if we've got, a qualified or an adverse report or disclaiming opinion on how we do that, if it's material and pervasive and so forth. It doesn't matter. Omnibus status, when we hear the term omnibus used by the standard setter, understand that affects numerous sections of the audit standards, not just one section. So omnibus, this one touches a lot of the standards. All it talks about is some of our requirements around our communications with those charged with governance, where we might have required communications with them now related to previously undisclosed related parties, any kind of difficulties or differences of opinion we may have had with audit staff, the evaluation of these transactions. It requires us to communicate, what our views are concerning significant unusual transactions. We're required to communicate if we determine there are significant unusual transactions, to talk with management or those charged with governance about them, make sure that they understand that they're going on, what the effects of uncorrected misstatements are. Allows us to communicate with them about complaints or concerns regarding accounting or auditing matters. Although a significant unusual transaction does not always indicate fraud has taken place, it gives a higher risk awareness that it might have taken place. Yeah, and that's what this box is. It reminds auditors that the presence of significant unusual transactions may indicate a higher risk of fraud, although it's not an automatic presumption. Related parties, we talked about that. EBPs, now do y'all do employee benefit plan audits? Okay, this one's going to impact your employee benefit plan audits. It takes away the terminology of limited scope. What is it called? An ERISA, 103A, 3C kind of stuff. I'm going to call them limited scope. Still allows us to perform the limited scope engagement as long as there is a valid, I'm a mental loss for term, certification, thank you, of the accuracy and completeness of the information inquiry for investments only. Okay, so we can still do that. It will add performance requirements. Now, the interesting thing about this is, most of our performance in an audit revolves around risk, right? Higher risk, more performance. Lower risk, lower performance. No risk, no performance. Well, this one says, hey, there are certain things that you're going to do, certain substantive procedures performed regardless of the risk material in the statement. So that kind of flies in the face of the risk-based audit, but some of these things we're doing anyway. It has an example of what the auditor's report will be like. There it is, ERISA section 103A3C. Reminds me too much of a 501c3, so I'll call it limited scope. But that just takes the place. Okay, again, make sure that you have a valid certification that certifies both the accuracy and completeness. I've seen one instance where the certification didn't include both of those. And the firm relied on it. Peer review caught it and said, oh, by the way, this certification is valid. They're like, same one we've had for years. And so, they went to a hearing panel and said, hey, it's not a valid limited scope. You should have done a full scope. That's how important it is. I'm telling you, make sure you have those things. Make sure they're valid, signed by somebody who has authority to do it. Most of ours are at the standard and different places like that. You know what it looks like. There are some of these third party, that may not be as formal in the process. Okay? There are some of your certain required procedures, new reporting language where you have an ERISA permitted limited scope. Section 137, other information and included in annual reports. Again, this is just your financial statements are associated with other information outside of what the audit is. What's our responsibility? Read. Make sure there are no material inconsistencies. Get a representation from management. If we want to issue a disclaimer, we obviously can. Now, listen, not a lot of my clients have annual reports, but sometimes they'll post the financial statements to their website. There's other information on their website, and so then I think we have a responsibility to read the other information surrounding it. Now, we don't have to look for omitted information. We don't opine on it. It's not covered by an auditor's report, but we just want to make sure within that area that they're not holding us to a higher responsibility than what they should. They may have a chairman's statement, governance statement, financial ratios, names of officers, directors, those type things. Describes what a material inconsistency is. Not requiring search for omitted information or for the completeness of other information. The description of materiality. Each one of your standard setters, the SAS did it here. Sars does it in Sars 25. But it amends the description of materiality to really conform with and align with the definition used throughout those different agencies. Judicial system, SEC, PCAOB, FASD. Now, when you think about the concept of materiality, It's consistent throughout the standard setters. So now we're looking at what GAAP says is material, the definition of material. Now it's consistent within the audit standards and within the Sars. Changes it to could reasonably be expected to one that would influence the judgment of a reasonable investor. So it changes it slightly, okay? And so we need to think about the whole concept. There's the new definition. Okay, misstatements, including omissions, considered if there's a substantial likelihood that individual, they would influence the judgment made by a reasonable user. Not could reasonably be expected to, but would influence the judgment. I think that's more clear. To me, that's a more transparent definition. And so they don't care, but I'm okay with that definition. And then SAS 139 just changes the form of the auditor's report to conform to special purpose frameworks. So it's not just GAAP, it's special purpose frameworks. To say, hey, you use the same auditor's report style that SAS 134 said. If you're doing just a balance sheet or just an element or if it's a special purpose framework or a summary financial statement, that's the format of the report that you use. SAS 140 just conforms the new auditor's report to interim financial information, compliance audits, internal control over financial reporting. And so it just really kind of cleans that up to say, hey, this is our audit report. Every place that you issue an audit report should look like this. And again, SAS 141, push the effective date out 1 year on all those. There we go. SAS 141 extends the effective date by 1 year. So instead of for calendar year 2020, it'll be for calendar year 2021. Okay, I think we wanted to skip through this chapter. Is that correct? That's a cool looking cube though, isn't it? Look at that, they use colors and stuff. This is kind of interesting. I want to make sure that you understand. They have some proposed SASs right here that are not proposed anymore. They were issued this year on audit evidence. That's a pretty important SAS. If you were to look at the audit evidence SAS, you know, for years, and I don't have papers in front of me, but if I did, I would take papers and say, this is what audit evidence was, right? Because we had the printed document. We looked at invoices. We had to pull invoices, POs, all those type things. In the digital age, what's audit evidence? You know, what's audit evidence when I'm doing a remote inventory observation? Well, we had to consider that, right? What about the management representation letter? Is it okay to have a digital signature on a management representation letter? Is that sufficient, appropriate audit evidence? I've seen a couple of webinars on that put out by the AICPA and the chief auditor, Bob Dorr of the AICPA. You know, he says, I'm telling you, you got to be careful. Because we use a lot of digital signatures. You know, on a management representation letter, I would like that to be maybe a PDF, digitized signature that has a timestamp and so forth like that. But even with that, who's to say the secretary doesn't have the boss's passport and sign it for him and go? She may sign it for him now, I don't know. But typically, you know, in the handwritten, maybe we've got we can validate the authority. Maybe we've seen them do it. Audit evidence SAS is pretty important. At least I think. What are your sources of information? What's the reliability of it? What's the relevance of it? Is it corroborating or contradictory? Sufficient. Revises some of the definition of sufficiency and appropriateness. Audit data analytics. And then auditing accounting estimates and related disclosures. This one was issued as final this year also. This is no longer a proposal. It's been issued. I think it has a 2022 effective date, if I remember correctly. I don't think it's on here, but I think it does. Okay. I told you I was going to zip on through to the Sars, and I guess I lied. I'm sorry. Okay. Last chapter we're going to cover today. Press comps and reviews. SARS update, I'm going to assume that you all do SARS engagements, because I asked you before if you do reviews, and you said yes. What about preparation engagements? Do you all do any of those?
Yes.
So I'm getting this thing here. Yes. But then everybody's got on a mask, so I have no idea what to say. Okay? Anyway, if you do, I mean, they're simple to do, hadn't had any change to it. So, the SARS Clarity Project, again, just like every other professional standard, the SSAEs, the SASs, the SARS back in 2013, well, even a couple of years prior to that, we worked on clarifying the SARS. It's similar to what the ASB did. And so anyway, we redrafted them. I say we, I was chair of the ARS whenever this was done. And so it was kind of a long process. It took us about 2 years to do it. And every one of us who was on that committee did these. Now you go to the Audit Standards Board, I don't know that everybody does audit work. Everybody's got an audit background, but I don't know that they necessarily all do audit work anymore. Okay? But the format is similar to the SASs, we know that. And so it was issued in October of 2014. SARS 21 had an effective date for periods ending after December 15th, 2015. And so it's in ARC section 60, 70, 80, and 90. It introduced the preparation engagement. Now, at the time, the firm I was with, we did a lot of write-up services for small business clients. They always needed a set of financial statements. Very rarely did they need those to go to anybody. And so we early implemented the preparation engagement. Then we could just give them a set of financial statements. They didn't have to worry about if a report was with it or not. And so the preparation engagement is really simple. It has about 23, 27 requirement paragraphs, which, you know, our objective is to prepare a set of financial statements in accordance with what the framework calls for. Simple enough, right? How many, do y'all prepare financial statements for your clients? Every last one of them, don't we? We have a few that can give us the basic financial statements. Not many that do full note disclosure, not any really that do full note disclosure. We have some that can do a pretty good job at it, but we prepare most of the financial statements, okay? But we'll take these and put them in the format. There's no report required. We're not required to be independent because PEAK, the Professional Ethics Executive Committee, has come out and explicitly said that the preparation of financial statements is a non-attest service. A non-attest service is one that does not require independence. And it eliminated the management use only financial statements. Years ago, we used to do some of the management use only financial statements, but when those kind of leaked out, when they should not have, because a banker called our client and that was the only financial statement they had, so they gave it to them. We decided not to do management use only. Did y'all ever do any of the management use only? Yeah, you had an engagement letter that was super thick. That said it may or may not be in conformity with this, it may or may not include disclosures, it may or may not, it may or may not, it could be, all this type of stuff. And you put a legend that says for management use only. And we had a good understanding that says, don't give these to anybody. And they did until somebody called and asked for something. And so, and at that point in time, ethically, I couldn't answer questions on it. I said, give it back to them. You'll get the same set of financial statements back to you with a report on them, then I can talk to you. This gets rid of the management use only. You're either going to compile or prepare. And then the compilation, we're still preparing the financial statements. Right? It says, we assist in presenting financial statements. We're doing the same thing. The financial statements and the compilation and the preparation should look identical. Should be no difference in any way and shape those things look like. Numbers should be exactly the same. Independence is required in a compilation. Although we can still perform, we just have to report we're not independent. Now, what percentage of your clients are y'all not independent with? Yeah. Are y'all independent with all of them? Got a couple? Yeah. Okay. I find most firms at least have some that they're not independent to. Because the client's like, listen, I hired you to be my accountant. You want to be asking me all these questions about what we think we should do? Ain't got a clue. It's all on you. And so we know. And so I'm not independent. Now, if we want to do a review down the line, game over. We can't do it. We've got to, unless we have time to cure that independence issue. Okay? So compilation, independence is required. Although we can still perform, we just have to report that we're not independent. And management is responsible for the financial statements. And then a review. Now, I like a review, but a review has always, I don't want to say it scares me. It's given me a little bit of an uneasy feeling, right? Because that's that middle range, right, between no assurance and reasonable assurance in an audit. It's limited assurance. And up until, SARS 25, there was no definition of limited assurance, so it was just, yeah, I think I'm there. And so we obtain limited assurance, issue a report based on limited procedures that typically includes, and should always include, inquiry and analytic and a management rep letter. You're not precluded from performing other procedures if you deem that necessary. I probably told you about the very first review engagement I worked on. I'd been out of school about 6 months, and my boss at the time said, Brand, I want you to get us ready to go do the review for P.L.C. It was a petroleum sales company, so it had convenience stores, it was a petroleum jobber, had a consolidated set of financial statements. He says, get the working trial balance ready, which at that point in time was pull out the 14-column pad and hand write that bad boy. Yeah.
Digital boy.
Yeah, it wasn't no digital back in 1376 when we started this thing, right? And so, we would hand write those type things. That was before ATB, Accounts Trial Balance, came out. When that came out, we thought we had won the world. Man, this is awesome. I remember our first laptop PC was about the size of this desk, or this table right here, and had a screen about this big. We were in business, though. Had a menu-driven thing. You had like 6 options.
Did the keyboard fold out in front of it?
Oh, yeah. Well, this one actually, this was a laptop. Now, listen, it would fit any size lap. But it was like a small Samsonite. You opened it up, and it had a keyboard down, heavy as lead, man. I remember the first time we used it, we had an audit client. They were headquartered up in Canada, but we audited all our U.S. companies. So every year in the middle of February, we fly to Canada for 2 weeks. And boy, I remember toting that big thing up there thinking, and they're like, man, you gonna check that bag? It's a computer. They're like, yeah, okay, whatever. I opened it up like, sweet. Thank goodness times have changed, right? But that first review, he said, I want you to get the trial balance. I want you to schedule a day for inventory observation, get the confirmations ready, and then schedule our field work dates. And my thought process goes, and in my mind, thank goodness I didn't say it out loud because he would have fired me. Man, you're talking about an audit, right? I mean, do y'all typically observe inventory in a review? Typically send out confirmation in a review? Typically do field work in a review? Typically do any other ations, reconciliations, observations, all those type of things? We typically don't. And so, man, I wanted to say so bad, man, you're wrong, dude. We're not doing an audit, but thank goodness I didn't. Because if I would have, he probably would have had that discussion with me. If Tucker ever had a discussion with me that started with, public accounting's not for everybody. He's stroking your last check right about that time. And he's saying, been nice knowing you. But about 10 years later, I said, man, didn't understand at the time why we did those type of things. I said, I think I understand it now. I said, I wanted to say so bad, we can't do this, that's an audit. And he explained to me. He said, have you ever tried to do trend analysis on convenience store inventory? Think about that. All depends on what day of the week the year ends on. If they had a truck in, if they had a truck in, all that type of stuff. So trend analysis is going to get you everywhere. He said, so for me, the best way that I could, satisfy myself is to do inventory observation. And so because he couldn't accumulate enough review evidence, that's why he did those type of things. So the review is cool, but we got to understand it's got a lot of responsibility with it also. There's your general principles. We're running out of time, so I want to do this. SARS 24. Y'all doing any international reporting? Okay, good. We've got one or two that we do. That's at the audit level. And so SARS 24 covers international reporting issues that we want, but it also get to it. gave guidelines on going concern issues in a review engagement. Okay, pre-SARS 24, if you ran into a going concern issue in a review engagement, where would you go for guidance? You'd have to go to the audit standards, or maybe to GAAP, if it were a GAAP-based financial statement. Well, now, the SARs also have guidance in it, and this is specific to review, but I think it would apply to a compilation and a prep also when it comes to going concern type thing. That just talks about, hey, you know, it's going to require us to perform procedures in a review about whether the going concern basis is appropriate, because that's the assumption first, right? The assumption is when I come to do the review of your entity that it is on a going concern. But if there's substantial doubt about their ability to continue as a going concern, what's another option possible? Liquidation basis. Okay, so we got to make this inquiry and other inquiries. It also talks about the adequacy of related disclosures. It puts the onus on management to make the determination about and to make the evaluation about their ability to continue as going concern. So it really aligns well with what the SASs and the FASB. The time frame is the same, 12 months from the date the financial statements were issued or available to be issued, and add some inquiries regarding the going concern. Defines a reasonable period of time, requires an emphasis of a matter paragraph if there is substantial doubt, if management's evaluation hasn't mitigated it. And we're going to finish up with SARS 25. This was issued, I believe, in February of this year. And so this is the last substantial SARS that has been issued. And it talks about materiality and a review of financial statements and adverse conclusions. It also includes a definition of what limited assurance is. And so it converged with the ISRIs, 2400. It also is in agreement with AUC Section 930. Now that's kind of that odd one-off review engagement that you wouldn't follow the SARS, you'd follow the audit standards. That's where you're performing for a review, an interim review for a client that's annually audited. That's when you follow the audit standards instead of the SARS. And so it aligns with that too. And so again, here's your effective date. Has a periods ending on or after. So this would be for calendar 2021 with early implementation permitted. Okay? It changes a number of sections. Okay? It not redefines, but it defines financial statements. Okay, that's a pretty long definition. But it talks about disclosures and what they comprise, explanatory or descriptive information as required. Talks about, our responsibility to inform management of the reasons when we have determined it's appropriate to withdraw. Let's get to... There we go. There's your definition of limited assurance. Okay? And again, I don't know if this gives you a whole lot, but it gives you more than what we had before. It's a level of assurance that's less than reasonable assurance. So, okay. Obtained in an audit, but it is at an acceptable level as the basis for conclusion expressed in the review report. So it says, well, we didn't audit it, but we did more reading. Okay? So, again, it doesn't give you a lot, but at least it gives you a little bit. But we had a guy who was on the ARS when I was on the ARS, and Chaz is a good friend of mine, Chaz McElroy. He was with Larson Allen, so he was a large firm. So he would always liken the whole, limited assurance to sports analogy. He and I, we're just sports nuts. And he'd say, Mike, in a compilation, we're not even in the field of plays. We're offering no assurance whatsoever. In the audit, we're at reasonable assurance, so maybe we've crossed midfield, but we hadn't gone far into their territory. We're not into the red zone, so to speak. He said, you know, at least in the review, we've entered the field of play. We're not up to this, but we're not here. And so for me, I was like, oh, I get it. But now we've got this. Much better, right? But it's okay. It adds the explicit requirement for us to plan and perform with professional skepticism. Remember I told you earlier that every one of them addressed professional skepticism. Sars 25 does that. To determine materiality and apply in designing procedures and evaluating results. We've always thought about the concept of materiality anyway, right? Because our report says what? Based on this, we conclude that no material modifications need to be made for these financial statements for them to be in accordance with whatever framework. So we've always thought about it, but now we have an explicit requirement to determine. And so for me, I take that as an explicit requirement to also document our considerations. Did you have a question?
So is there going to be a D1?
A D1 would be what?
Past adjustments.
Past adjustment. Wait, say that.
Like, so now you've identified that they're not material.
Oh, yeah. I think there may be. I think there has been before anyway. At least in ours we have, because we've thought about the concept of materiality, and we've had some that we've just said, you know, if this were posted, it wouldn't, you know, change things materially one way or the other. And there have been some that we have passed on issuing up, okay, or submitting to our client. We've told them, hey, they're here, but we're not here to bookkeep. We're here with a materiality concept, and so yeah, I think if you hadn't in the past, I think this will come into consideration. And so, you know, will that also bring in the fact that you should accumulate those and maybe carry them forward? I think potentially it could. All right? And so, again, it also requires us to remain alert for related party relationships and transactions. I'll tell you this for folks, did you all document materiality in a review? Have you in the past? Some firms have. They've used like a CX 2.1, which is an audit planning form, which that always worries me. I didn't do that, but if you use Thomson Reuters, they have a work paper now to document materiality for a review engagement. To me, it's conceptual too. It's not just a number. It's more than just a number. So you got to think about, you know, other things with it too. But now I think this ups our responsibility to at least document materiality. And again, provides the ability to issue an adverse conclusion. Okay? Well, that's Sars 25. The rest of the slides just come about talking about, hey, here's some issues that peer review has seen, or some common practice issues when it comes to these types of engagements. Anybody have any questions or comments? Anything else you would like me to cover before I give you the cut and run signal? Again, people are looking at you. If you ask a question, they're going to kind of feel about you kind of like I feel about the dude who wanted me to see his car.